All right, what's up, everyone? Welcome to our last This Week in Crypto of August 2022 here. It's looking to be a good day thus far, relatively speaking, after we got some news about the consumer prices falling in the US here and incomes also rising in July as inflation has been easing. This is a pretty good sign for crypto for multiple reasons. The obvious one is that with the correlation to the S&P 500 that crypto has seen for the majority of 2022, prices will rise if the S&P starts to rise, and the S&P in a vacuum will react positively to this kind of news. It may not happen immediately, but over time, there should be some price rebounding, assuming there isn't something else that pops up, right? It's easier said than done to just say, oh, consumer prices fell, incomes rose, inflation eased, all is good in the world again, but it's never that simple. That being said, in a vacuum, this is a good sign for equities and world markets in general, and with crypto staying closely tied to those markets, we should, in theory, see some positive news coming from crypto as well, if the S&P and other world markets do what is expected over the next few months. Again, we don't predict markets on these streams. Investment advice is not our thing. What we do is we analyze based on data and major reports like the one that just came out a couple hours ago about how logical an up move or a down move would be based on the circumstances going on right now. So that said, with this CPI report coming out today, it looks like good news. The July dip was kind of an expected thing for a lot of people because we had seen such a large drop in prices and overreactions to inflation and all sorts of things. And there's still some lingering effects with things like COVID going on, and the Russia-Ukraine conflict, of course, and even just the fear of recession. They've all been issues that have really pounded down many markets for the majority of 2022. Many have speculated that it was an overreaction and things were getting a bit oversold throughout July and the first half of August. A lot of people who were saying that were getting vindicated by watching prices rise. But in the past 2 weeks, things began to start dropping once again. And there was some worry out there. But if we go to our screener here and we look at how prices are fluctuating, we can see that it's been pretty boring for the top assets, Bitcoin, Ethereum, basically dead even over the past week. But as we start to scroll to the right and get toward our mid and lower caps, we start seeing some standouts like Atom, like Toncoin, like EOS, Chiliz, BitDAO, and then Terra Classic, interestingly, at plus 42%, not to mention Huobi token and Curve DAO token. These are all assets that had double-digit percentage gains over the past week, despite Bitcoin, Ethereum basically being dead even relatively. So what we're seeing now is kind of a separation between various altcoins and the top dogs that are kind of just staying put and staying stable so that the cream can rise to the top. Altcoins that had really been beaten down can begin to recover. Altcoins that are doing something special and have some real world value and some mass adoption going on, they're the ones that can really start to make some traction right now in the markets. So things are looking interesting, to say the least. And if you are an altcoin trader more so than a Bitcoin hodler or Ethereum hodler, you were handsomely rewarded over the past week for taking on those risks of more volatile assets. As far as social volume goes, it's interesting to see the boring assets, Bitcoin and Ethereum. I put boring in quotes, of course. They're both up significantly in terms of discussion rates on social platforms, despite basically being flat. And then we look at some of the altcoins, whether they surged or not, they're staying pretty low, and many are actually dropping in social volume. And that's kind of a pattern we see that's awfully familiar in markets, is the ones that are talked about the least are the ones that are able to surge with the least amount of resistance. The ones that are talked about the most, they can often be frustrating to traders or just be dead even. And that's kind of how this past week went. You know, there are a few standouts like Uniswap getting a big jump, FTT, very small jump. A few others here. I mean, EOS, yeah, that EOS makes sense because it's up 31%. So that's probably a discussion rate spike that happened in hindsight of the price pop. Frax, Chili's, obviously another one that had a big week. Chili's has had an enormous run over the past month and a half, I believe, with over 150% gain. So it really varies from coin to coin, but this is where like the objective fundamental data can really matter and make a difference, because coins are not all fluctuating in unison the way they're known to do, all based on Bitcoin's fluctuations. And with Bitcoin even, this is the time where you really start to see altcoins separate from one another. Some fall below, right? We see that Flow had a rough week, OKB had a rough week, and Helium had a rough week, among others, Lido DAO as well. But the separation that we're seeing right now is really a product of Bitcoin and Ethereum being flat and others deciding whether or not they can start to rise as traders start to put their volume and their hard-earned money in less known assets, to either try to ride a pump, to initiate a pump, whatever the case is. Obviously, whales play a big factor. We'll get into that and exactly how they've been behaving and what they're looking at right now. But there's a lot to unwind here, and we can definitely start by looking at token circulation rates. I put out a article at the beginning of the week about how the rate of unique tokens moving within a specific network is really starting to separate from asset to asset. And we go down to our first one, Bitcoin here, and we look at the screenshot from our NVT Sandsheets model, and it's shown an interesting picture, right? We've had a lot of red stretches here, where prices tend to go down, not always, right? Sometimes it'll still rise despite a serious lack of circulation compared to the current market cap. But generally, we want to look for these green territories as a good sign of a price rise. Yes, this was an anomaly because we had plenty of circulation happening relative to the market cap, which was hemorrhaging and dropping like crazy. And this happened obviously due to real life events more so than the circulation of Bitcoin. And now, interestingly, you know, after we finally saw that jump on a green bar, we instantly got a semi-bearish bar during the recovery month of July, and now we're back down into bearish territory for August. So that's a concern for sure. Even though it's back up near 22K right now, I want to make sure on that price, 21.7K, excuse me. So even though we're at 21.7K right now, there's a little bit of concern considering we are seeing this red bar here. And really, it's the first one we've seen since last September, so just about a year ago. This can change in a hurry, especially if prices really start to move in one direction and start to polarize traders again. That's when you'll typically see circulation start to pick up. And whether it's on a down move or an up move, it's usually good if you see that circulation pick up. So right now, you know, we've had a big drop in just overall social volume. And I'll jump over to that really quick because it's very interesting to look at. See here. I'll just do it this way. So if I just type in an asterisk right here in the search bar, and I wait just a moment. So this is the overall social volume related to crypto on the various platforms that we have. And we can even back it up to the last year to see a little more context. And really, it's been a decline in recent months, to say the least. Obviously, the biggest time of discussion is going to be right around here, right around the all-time high, right? This was this was the FOMO moment where people finally saw a tiny little bit of a downswing after an all-time high was made, surpassing the all-time high that was made in April. So everyone was talking about that all-time high, and it just rose and rose. And then on this dip, everyone's like, all right, well, this is the time for me to jump in. I've been waiting for crypto to take a little bit of a downswing. And sure enough, when the mainstream crowd really starts to say buy, 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 that typically is when prices either continue to drop or they suddenly turn around and drop. It's typically not a very good thing. We saw one rise here. I'm not positive what this was related to in late April, but regardless, you can see the overall trend has been, a decline in participants in crypto and discussions in crypto, of course. And we can even look at it by platform. Telegram saw a big drop here in mid-June, right before the final big drop that we saw, at least up till now. Reddit's just seen a continued gradual downswing over the past year. And Twitter, same thing, gradual downswing, not quite as extreme as Reddit, but Twitter nevertheless is moving in the wrong direction. I shouldn't say wrong direction, because this isn't necessarily a bad thing. But overall, when there are less participants, it's going to make it harder and harder to see impressive circulation that would justify price growth and market cap growth over time. But all it'll take, right, are a group of whales deciding, all right, I'm going to start accumulating again. I'm going to bump up the price, and then the mainstream and the crowd will react to that price upswing, and it'll create kind of a self-fulfilling prophecy of people starting to FOMO back in, and these social volume bars might start to turn, and just due to those whale buys happening within like a week span, we suddenly have another big interest spike in crypto again. That's how the cycles tend to work. So moving on from Bitcoin, we move down to Ethereum here, and it's not looking very good for Ethereum either. It's had a little bit of bipolar behavior over the past few months, where in February, March, and April, not enough circulation, prices indeed dropped, began becoming semi-bullish and then bullish here in May and June. You can see it bounced once it hit a bullish circulation bar. And now in July and August, we're back in bearish territory. Now, this has to be taken with a grain of salt. We obviously have the merge coming up in just about a little under 3 weeks now. And that's going to play a factor and create a lot of polarization as we get closer and closer to that date. Very difficult to say, and beyond my pay grade to tell you whether the merge is going to be a bullish or bearish event. That's the $1 million question for everyone. And sometimes it's very difficult to decipher what it's going to look like until we're in the midst of it. But generally with forks and merges and things, especially for major assets, there tends to be kind of either a buy the rumor, sell the news, or sell the rumor, buy the news effect. Right now, it's arguable that we've seen a little more of a buy the rumor type of effect, where, after we got down to a little below 900, the price doubled at one point, got back up to 2,000 about 2 weeks ago, before quickly dropping back down, got to about the 1,500s, and now it's just below 1,700 as we speak here. So it's been all over the place, but overall the effect related to the merge, especially after Vitalik announced it, has been pretty positive. Announced the date, I should say. So, it'll be interesting. I'm still going to be concerned with these bearish bars here, showing that there isn't enough circulation to justify the current market caps, which, by the way, aren't nearly what they were, last year, when we were seeing incredible, 4,000 plus prices, almost got up to 5,000 at one point. So keep that in mind for Ethereum. As we move down, we did just a quick snapshot of a few other assets. Chainlink, always a popular one among the trading community. It's showing a semi-bearish divergence right now. June was the bullish bar that we were waiting for, and sure enough, it bounced right off of that, and it moved up a little bit, but it's in the $7 range at the moment, and we're going to have to see just a little more circulation coming from this ERC20 token to really start to feel confident like we did during this green bar stretch for almost a year and a half back in 2020 to mid 2021, where it ended up hitting an all-time high right on that last green bar. Finally, actually two more here. Litecoin. This is an interesting one. Obviously, the second oldest asset in crypto, the Lightning Network. It's seen a whole lot of green. It's actually getting a ton of circulation and has been for about the last year, but prices have dropped regardless. And it's sort of like Cardano. It's kind of lagged behind a lot of the other top assets in crypto. It isn't to say that just because it's lagged behind, it's more likely to pop next. But there is an argument to be made that an asset like this that is seeing so much green for so long, the last one before there was a break was in May 2021, where it hit an all-time high and then dropped a little bit. But overall, we have to be pretty happy with the fact that there's such a long stretch of higher than expected circulation for Litecoin, which is, relatively under the radar most of the time, unless it's really breaking free of the markets and behaving abnormally. Finally, XRP network, another asset that's showing very bullish circulation at the moment, with prices really falling behind, kind of like Cardano and Litecoin, staying relatively low and not popping the way a lot of XRP enthusiasts were hoping for. Circulation is certainly there, at least from May up until now. We've seen more than enough circulation to justify that prices can rise, but XRP can be a tough asset to predict. Obviously, it is a heavily centralized asset with a very large percentage of assets sitting in top tier wallets, and they have a pretty high amount of control of where the price goes next. So it may just come down to when those top tier wallets finally decide to accumulate or make a move that is going to create some positive momentum for XRP. So that's it on circulation. I just wanted to update on that. And then another article that we released yesterday was just a quick update on what's going on with Ethereum. We see here, this is just kind of a TA analysis on what's going on. It's following very closely to the S&P 500, with the price of Ethereum in green and the S&P 500 in red. Very tight there. We'll touch on that more in just a moment. The S&P retested the break zone, which we kind of refer to as the previous resistance. So this is a polarizing moment right now because we're in it. And actually, ever since the article, we're a little below it at the moment. So something to be cautious of for sure. But like I said, the S&P 500 theoretically got some positive news today, which could be very good for an asset that's been following so tightly to it, even more so than Bitcoin has. Another thing to look at is the supply on exchanges. Just last week, we saw this huge rise. I think it was the highest one-day rise of the year in the supply on exchanges. And it was mainly due to Binance shuffling Ethereum from an unlabeled wallet to a labeled one. And this not necessarily was the propagator, but it definitely contributed to the price downswing that happened shortly afterwards, where the price is now recovering. But it's interesting to see that this supply and exchange spike happened just before the big drop. Network growth, not looking great, kind of like circulation. Network growth is defined as the amount of new addresses coming on to the asset on a daily basis. And network growth is more or less back down to the lows of the at least the last 3 months. We saw similar lows in July twice. And with this one, it's definitely considered a bearish divergence as far as network growth goes, with prices moving up and network growth moving down. And then we have a short-term MVRV look here, where we can actually see that on the 7-day, it jumped back into positive territory. And you can see quite clearly that when it goes into the danger zone, there's usually tops forming. When it's in the opportunity zone, bottoms are forming. And the price clearly bounced once it hit the opportunity zone most recently, and is now back in neutral territory, but a little on the cautious end, being 3.75% above the resting average of 0. So that's just a quick take on our Ethereum article that we just put out. Feel free to comment, let us know what you think of that one or the token circulation one. And in the meantime, I'm going to move on to some Bitcoin analysis here, beginning as promised with the correlation between Bitcoin, S&P 500, and the price of gold. And we still see quite clearly the break in correlation between Bitcoin and the S&P 500, where I'm drawing the S&P there and Bitcoin here. Clearly, Bitcoin has not bounced the way the S&P 500 is. And I'll even add Ethereum since we just talked about it in the article. And Ethereum looks a little bit better. So we put this up and we see that Ethereum actually got down here, was looking like it was parallel at one point, but did have this drop. And keep in mind, these are all relative percentage gains and losses. So this percentage gain for the S&P 500 isn't nearly as much as Ethereum. It's just that Ethereum is more volatile, which is why it doesn't look like it's recovered as much. We can also zoom in to about the bottom, and you can see it looks a lot tighter. And now Ethereum looks pretty much right in line with the S&P 500, while Bitcoin and gold are actually very similar at the moment. But really what we want to see is a continued breakaway between the S&P 500 and Bitcoin. And we're not nearly at the point where we can say, all right, they're fluctuating on their own merit at this moment and no longer relying on each other. It's still very much looking like a correlation, other than this drop, which was much more significant for crypto than it was for the S&P 500. And that's where we sit now. But let's continue to monitor, especially after this latest, I guess you'd call it the second consecutive positive CPI report that just came out, and see if that finally allows there to be a little bit of wiggle room between them. And that tends to be where crypto flourishes the most, when there's no reliance on the S&P 500, not a negative correlation where they move in opposite directions, not a positive correlation where they move parallel. We're looking for no correlation whatsoever. So that's a little bit about the crypto and equity relationship. Now let's take a look at some of the main metrics going on for Bitcoin. We've already kind of touched on the circulation end for Bitcoin, continuing to move down, which is why we're seeing that red bar this month. And moving on to the other big utility metric, daily active addresses. Looking at the past 6 months, it really peaked out here in early May, right as the price drop was happening. This was when we were really in the heart of recession fears and potential, caution flags coming all over the place for the U.S. economy, at least, about how we weren't going to be able to sustain, stock prices being where they were, and a lot of people were panicked. And since then, you can see there's been a gradual decline. It has risen a little bit since the beginning of August, but where it stands now, we're getting an average of about 898,000, 899,000 daily active addresses, compared to at its peak, sitting at about 977K per day. So a little bit of a slide there. We could even zoom out a little more to give you some perspective of like the last 3 years. And really the big top for daily active addresses happened during the first all-time high of last year in mid-April, where we actually saw one single day of 1.36 million. I think this was the highest ever. And then we saw this huge drop off all of a sudden when a lot of people just froze up after seeing this big drop in the span of, what was it, from May 7th to, just like May 7th to May 18th or so, that 10 to 11 day span. Everyone was just floored by what had just happened, and stagnancy started to prevail in the networks. Eventually, we saw this big price rise, which started to get daily active addresses flowing, but not to the extent that it was in March and April. And since that time, it's actually started to drop back down, where we're at now at 898. It's not quite where it was from last summer when we got down below 800K per day. And it's still a lot better than we were at in the beginning of 2020, which was below 700K per day. But regardless, we're still not quite seeing the amount of daily active addresses we want to see to justify the price rise we're all, or most of us, are hoping to see. Quick check on chat really quick, see what's going on here. Thank you to the 12 of you in the chat right now. I know that there are probably plenty more watching on Twitter, but as far as YouTube goes, feel free to drop in any sort of comments you might have or some questions as we progress here on the call. If you're watching on Twitter, don't forget that if you move over to YouTube, we'll be able to see your live comments and be able to address you a lot more quickly. All right, so moving back to our main metrics, if we head down to MVRV now, so we've got two different time frames shown here. This is the 30-day MVRV, which shows that we're currently sitting at about -6%. Usually, as long as it's above the -15% line, we aren't in a major opportunity zone, but in a vacuum on the 30-day scale, it's a good thing if we are below 0%, which we are now. This means that there is less risk than average of adding onto your portfolio or entering a new position in Bitcoin. In the meantime, the 365-day MVRV is still looking very promising because the average trading returns are still sitting at about -38% over the last 365 days. It doesn't mean that the entire price of Bitcoin is down that much. It just means with all the FOMO and FUD and people adding on or dropping off their Bitcoin at non-optimal prices, the average returns among active addresses is -38%, when no matter what time frame you're looking at on MVRV, it's going to fluctuate around 0%. So considering we're very far negative, it's a good sign that there's still a lot of makeup ground here that can be had. And speaking of MVRV, if I move over to our model, as usual, I'm sure it's going to refresh as it usually does when I first open the window. But before it does, we see that there's plenty of semi-bullish divergences happening right now, particularly Celsius, which has really been beaten down a lot for obviously reasons related to its bankruptcy and the lack of belief by traders in it. But the majority of altcoins we saw before it started to refresh, we saw very clearly that there are a lot more negative returns from different time frames than positive returns, and that's creating some mild opportunities there to get in still, even with some recovery going on for altcoins over the past almost 2 months now. It looks like altcoins, at least many on this chart, have some promise. So we'll keep that in mind, and I'll try to jump back over to this spreadsheet later on the call. Age consumed for Bitcoin, not much happening right now. The dormant tokens are kind of sitting and waiting as of now, so not much to update there. Supply and exchange is looking very good at the moment. We look at the last 3 years here. If we go back to right around Black Thursday in 2020, right when prices dropped off and market caps halved or more all over the crypto sphere, we saw that Bitcoin had about 16.1% of its supply on exchanges. And since that time, it's dropped and dropped and dropped all the way down to where it sits now at about 9.02%. And that is the lowest it's been over the last 3 years. If we go back to the last 6 years, we can see that the last time it really got this low was in November of 2018, after it had this huge rise of supply moving to exchanges and prices were bottoming out right as that happened. So it's in general a pretty good sign to see that Bitcoin continues moving away from exchanges. It of course implies that there's less risk of a sell-off because there's physically and literally less Bitcoin sitting on exchanges to be sold. But we still have a ways to go to get back to where we were way back when in 2018, if it even gets that low. So overall, though, from a long-term scale, we like to see that it's continuing to move down. What we don't want to see is a is a big move up here, which happened prior to the April all-time high that happened right before the huge drop-off. In this one, of course, we didn't really get a warning. It happened for a variety of reasons, mainly whales taking profit, but supply and exchanges was actually still being moved down and down at the time. Yeah, let's touch on whales here. I'm going to move, actually, right before we do, let's get through the rest of these charts on this template. Exchange flow balance will move back into the last year, basically sitting around neutral. You can see most of the moves were outflows though, which is why the supply and exchanges is continuing to move down. Network realized profit loss also sitting at neutral right now. Development activity fairly high, which is good to see, sitting at about 53, 54 submissions per day right now. And then social volume and dominance. Very interesting to see. We've touched on this in recent weeks. We like to look for 20% or more as a good sign that people are not getting too altcoin crazy and they're still focused on Bitcoin, the granddaddy, the one that allows other assets to actually fluctuate the way they do. And right now, Bitcoin understandably is pretty boring to the community. And we're seeing that it's being discussed at about a 14% clip relative to the other top 100 assets in crypto. We like to see 20% or more as a discussion rate because that's going to imply that there's a healthy amount of focus on the number one asset. You can see when it is getting talked about a lot, that's when prices of Bitcoin really start to explode. When it's below, that's when you see a lot of declining happening. So right now, we're still under that threshold, and we have to be a little cautious because of that. Weighted sentiment, let me move into a 7-day look really quick. So we're continuing to see a little bit of a negative bias toward Bitcoin, and that's a good thing in a nutshell because we generally see the best rises when the crowd is expressing a lot of FUD toward an asset, and we see a lot of tops when they're expressing a lot of FOMO and getting euphoric about an asset. So right now, we look at like the last 3.5 months, and they're almost all negative weeks outside of this one anomaly here in mid-July. And that, from a long-term perspective is looking pretty good, especially with the amount of people that have flocked out of crypto once again because they don't believe in it anymore, even though these were the same people who thought it was free money, 1 year ago. So something to keep in mind there. The negative bias is definitely in the favor of the patient bulls who are still in crypto. Not too much to say about the ratio of daily on-chain transaction volume and profit to loss. We are seeing a bit of a loss ratio this week, which is a good thing for bulls. It means there's some capitulation going on, whether people are moving out of crypto altogether or they've just moved out of Bitcoin to get into some more exciting altcoins. The net result has been a lot of people transacting at a lower price than where their Bitcoin first entered their wallets. Whale transaction count, this is an important one. We're continuing to see a decline in the amount of transactions happening, big transactions, I should say, happening on the Bitcoin network that are deemed whale transactions because they're valued at $100,000 or more. And just to note, we also have a $1 million or more whale transaction metric here, which you can look at together. So I can disable this one. And you see that there's a little more fluctuations and volatilities going on when it comes to the $1 million or more metric. But regardless, it's still kind of moving down and not the direction we want to see. We'd rather have whales be very active as they were as prices were rising back in the latter half of 2021. Mean dollar invested age, not much to say here. Dormant tokens, as we discussed with token age consumed, are not really moving too much. And we're still kind of just seeing coins in wallets getting older and older without really moving for now. So a lot of hodl mentality going on, which isn't necessarily a bad thing. And it's smart for them, but we still need to see some active activity from older dormant tokens in order to justify a long-term rise, kind of like what we were seeing here with the lowering of the mean dollar invested age line as prices were continuing to rise up until October and mid-November, where we then started to see the line rise right as the prices were topping, and that was not a coincidence. Quick check in on chat. Angry Cardano guys enter the chat. Mo, just to clarify, what is it that you think, what is it you're referring to about bad news for crypto short term? If you're referring to this consumer price index report, I don't think so. I think we could potentially see an immediate positive impact, and then long term, that's where we'll really see how much people cared about the consumer price index numbers and the inflation reports that are coming out. But by no means does it mean that prices are going to rise out of the gates. There could be people who were expecting that inflation would continue to rise, and they were positioning themselves that way, and they might be changing things that could temporarily make crypto go down because of it. So moving on to Whales as promised, let me move on to our Tether and Bitcoin template here. Switch this over to USDT. All right, so the gold line here is the percent of supply held by 100 to 10,000 Bitcoin wallets. We see that it really peaked, at least for this year, back in March. I'm going to zoom out to 1 year though, because the real peak was in late October here, where it got up to about 49.5%, and it is currently sitting at 46.2%. So give or take about a 3.3% drop in the supply held by these key wallets. That's not great. However, on the short term, we can see that it was sitting at about 46.1 and is now up to 46.01 and is now up to 46.19. So 0.18% recovery by these wallets is a good sign. And we do see some effects on the price ever since they started accumulating. We could even argue in the very short term, this price drop coinciding with more accumulation by the whales just slightly is a good thing and is creating a bit of a bullish divergence. So long term, obviously, we're still a very, very long way off from the prosperous times when these whales were holding almost half the supply. But short term, it's nice to see a bit of a rise here. And it shows a degree in confidence by the wallets that really control prices more than anyone else. On the other hand, we look at Tether, which had its top just about 2 weeks, maybe 1 week after Bitcoin had its. And we specifically like to look at the $100,000 all the way up to $10 million holders. So this is both sharks and whales, of course. But they topped off in the first days of November and really dropped considerably, especially after the depegging that happened here in May. And got all the way down to about 27.7% after being as high as 41.03%. And now they're back up a little to 28.4%. So give or take, they've added about 0.65% of the Tether supply back to their wallets. So this implies there is some more buying power. It's not quite the very recent accumulation over the past week like Bitcoin had, but regardless, it's good to see that they both are above their bottoms that occurred around the beginning of this month. So overall, some positive signs for the whales. It does look like a little accumulation is going on, and now we just have to wait and see how sustained these efforts can be. Now, one other thing to update before we move on to some questions and some asset requests is the funding rate model, which shows the average exchange funding rate for Bitcoin and average exchange funding rate for the average altcoin out there, at least in terms of the top 100 or so altcoins that we have data on. Now, the blue line here is Bitcoin. We saw there was a huge spike in the Bitcoin funding rate last night or about 8 hours ago, depending on where you are in the world. and then it quickly neutralized. We saw some shorting going on. For altcoins, there's still some shorting going on. You can see that altcoins have been steadily in the green zone for the past 48 hours, while Bitcoin, just in this past hour, as it just refreshed, has jumped into long range again, which isn't surprising because we just hit a 48-hour high in Bitcoin's price. So there might be a little bit of FOMO happening, which is a concern. We'd rather see Bitcoin shorting happening like we did here right at the bottom. So at this top, you can see that prices moved down after that. And then at this top, this is a reaction to prices being at its 48-hour high. And we would usually, historically, this implies there could be a slight downswing on the very short-term time. And it even just upgraded and showed that the longing happened after this top hit. And just during the start of this call, prices have normalized a bit. And now people are viewing this as a very short-term dip. And that's why some longing may be happening. Regardless, Bitcoin is seeing mild longing and altcoins are continuing to see mild shorting. And if we go to this tab, we can actually see asset by asset, which ones are seeing the most shorting or most longing. There aren't really any that are seeing considerable longing right now. However, we see plenty of shorting with Helium, Harmony, Axie Infinity, Cosmos, and especially Synthetics Network Token are seeing a massive amount of shorts at the moment. So if you're a counter trader and you're looking for a few assets where you may want to bet long on the market because there's so much shorting going on, those would be a few options. Sia Coin here as well is an interesting one. Waves, as well as Small Love Potion. So yeah, that's a little on funding rate, guys. I hope these updates were helpful. We're about 42 minutes after the hour. So at this time, we can take a few questions and asset requests. Otherwise, we can also just go over a few assets that we think might be interesting to check out.
And let's start with Polkadot.
Sounds good. We'll look at Polkadot. Now, Polkadot is not an ERC20, mind you, so we're going to be a little limited on what data we can show. Polkadot's price, we can see since its all-time high, which was on the 4th, just barely on the 4th. So if we shift and drag our mouse to the right, we can see that the price has dropped 86% since then, over the past 10 months or so, almost 11 months. And let's take a look at some of the key metrics that we actually do have data on. So if they're in red here, that means because it's not an ERC20 or a blockchain that we have full data on, we just have nothing we can show there yet. But moving down to development activity, this has been a big thing for Polkadot. We can even go over to our screener here and show some context as to how good it's looked for the Polkadot and Kusama assets, which share the same GitHub repository. Click on dev activity here, give it just a few seconds to load. And we can see that Cardano over the past 30 days is still seeing the most development activity of any asset out there, but shortly behind them, Polkadot and Kusama sit tied for second. And with Polkadot being the 18th ranked asset and being second in development activity, it's a pretty good sign for the non-ERC20 asset here. Clearly, over time, we want to see a rising amount of development activity, and that's exactly what we've seen since it debuted back in early 2017. It really peaked here in March of 2021, right before an all-time high, interestingly. But if nothing else, I can even show you from an article that we wrote a few years back. It shows that the people behind the assets believe the project will be successful, it's shipping more features, and there's less probability the project is just an exit scam. And really, that's all we can ask for in terms of a little transparency. on how the asset looks, this is what we want to have in mind, is just a lot of push to innovate, make the asset more viable to be used in the mainstream or to be mass adopted by, Apple Pay or Amazon or something out there. So Polkadot is looking very good in that respect. Now, zooming back in here to the last 6 months, you can see that social volume did have a big spike here, but quickly dropped back down. Dominance did have a big spike along with it on August 22nd. I'm not sure what that's related to, but the price has moved up a little bit since that time. Since its bottom on the 22nd, yeah, it's up a modest 4%, which is of course better than Bitcoin and Ethereum, which are just flat at the moment. But then more interestingly, let's take a look at weighted sentiment here. We saw a huge euphoric spike happen just over the previous week. And right now, it looks like it's gone back to neutral. But this was actually the most euphoric we've seen for Polkadot since just about a year ago in mid-September of 2021. It's unclear because usually these euphoric spikes happen as a big price spike is happening, especially if it's decoupling from the rest of the markets. So if one of you, who requested Polkadot, if you know of some recent news that came out for Polkadot, I'd love to be educated on that so we can talk about how it relates to this big euphoric spike here. But yeah, thank you for the Polkadot request. That's about all we can show due to the limited metrics that we have as of now. Since I don't see any other asset requests, I'll recommend one myself. I think that Chainlink can be very interesting to take a look at. We haven't looked at that one in about a month. And we can see that the circulation graph is pretty dwarfed due to what happened in late June. We already touched on it in the token circulation report here and said that it looks semi-bearish. And as we look at this chart, and I'll just zoom in past this part, we can see that it's remained pretty flat even as prices rose. So it's, even though price is above where it was 3 months ago, sitting at about 693 versus about 610 back 3 months ago, circulation is about the same level outside of the previous day, which actually is seeing the biggest circulation spike since late July, so just about a month ago. So this could be interesting to see because the last time we got a big circulation spike here, prices did rise shortly after. Just from the 26th to the 30th, the price went up 33% the last time we saw a big circulation spike. Does not mean history is going to repeat itself by any means, but keep that in mind. Daily active addresses, on the other hand, is continuing to decline. It's not looking like there's anything special happening here. And in fact, if we go to the last year, yeah, it's by far the lowest it's been over the past year. Actually, right around the same as it was in early May. But regardless, we're seeing about 997 active addresses on Link. So it's under 1,000 again, after being as high as 5,500 a day back in mid to late September of last year. Moving on to MVRV, we see that the 30-day MVRV is below 0% right now at about negative 5.5%. And the 365-day is at about negative 11%. So both are looking pretty good. The 365-day, it's actually interesting to see that it popped into positive range recently on this mild run-up back in about 2 weeks ago, but is back down below now, as is the 30-day. So with both being under at the moment, it's in general a good sign and shows less risk in being positioned in Chainlink than usual. If we go back here and we actually check it out on the now refreshed MVRV model, we see the Chainlink is looking about neutral, likely due to the 1 and 7 day looking pretty okay for Chainlink, and there's been some price rebounding. So that's kind of neutralized out the longer term ones and is for now putting it at about neutral in terms of the probability of it, having a big rise once again, especially decoupled from the rest of the markets. Age consumed, not much to say there. We did see a very mild spike right here just in the past 24 hours. So a little bit of dormant token movement, but nothing too out of the ordinary. If we look at like the last year, I mean, this one really dwarfed everything. Let's go back to the beginning in 2017. And yeah, that huge dormant token spike was the biggest of all time by a landslide, and it did coincide with the bottom. So considering the last big spike coincided with a price bottom, as prices were dropping, it could be a good sign for the long-term viability of Chainlink. Supply and exchanges, zooming back into the last year, it is starting to drop back down now after it was seeing some concerning rises, getting all the way up to 19.12% on June 18th, but is now back to 17.8%, which puts it at about the same spot it was in March of this year. So as long as it's moving down, less risk of a future sell-off for Chainlink, all good there for the midterm. Whales, so taking a look at the price of Chainlink, sitting at about $7 on the nose or so right now, we can safely say that the 10,000 to 100,000, 100,000 to 1 million, and 1 million to 10 million Chainlink tiers are all seeing rises right now, especially the red line here. These are kind of the sharks that hold about $70,000 to $700,000 in Chainlink. They were sitting at about 6.3% of the supply held back in late March, and they're now up to 7.27%. That's a pretty big rise, especially dragging here. Yeah, they added about 15.3% to their wallets. The 100K to 1 million tiers have added about 21% or own 21% more than they did back in late March. And the 1 million to 10 million coin addresses that hold between $7 million and $70 million in Chainlink, they have 21.4% more Chainlink than they did back in late March on the same day. So all three are rising, and that is a very good sign. I definitely think it's nice to see this when it comes to an altcoin. When you're wondering whether it's just going to continue to decline, seeing that the top holders and those that have the most at stake are continuing to believe in the asset is definitely a promising sign. And we've seen the opposite happen many times for something like Luna, where we'd see a big drop in these three lines right before, of course, the collapse happened. I think it was April when that all went down. And speaking of whales, we can look at, I'm going to switch to our whale transactions model, and it might take a minute or two to load, so I'll hop back onto a few charts. So we'll give this just a minute to restore some data. It's going to do a refresh right now. And in the meantime, I'll jump back to a few more Chainlink asset metrics, and then we'll look at what other whale transaction and whale supply accumulation and dump metrics look like. As far as exchange flow balance, pretty much neutral, nothing too special there. Network realized profit loss, we did see a big dip yesterday. This was the biggest we saw since early July. And really what it means is there was some transactions taking place where there was a big realized loss. So this generally is a sign of capitulation and often coincides with a short-term or even mid-term bounce. Going back to these here, we could see these happen at the bottom in September and again in early December, bottoms here. This was another bottom in early March. Prices rose right after. Right here at the base of the drop in mid-May, another big drop down. This one, interestingly, was kind of at a top, but a very short-term one, and it's risen since. Bottom here, it's risen since. This was an interesting high spike, and then the latest is a big bottom, a negative spike once again. And if we base it on history of all these other negative spikes, prices generally rise after these. So obviously keep in mind what happens with Bitcoin and Ethereum, which Chainlink relies upon for its ability to rise and fall. But in a vacuum, very good sign that another negative spike has occurred, indicating there's been some capitulation and some people dropping out at a loss, which can mean gains for those who are still in the asset. Development activity looking solid. Chainlink was briefly on the top 10 most developing over the last 30 days. I think it's dropped into like the 15 to 20 range for now. Regardless, you know, we see 127 or so submissions per day on its GitHub, and these are notable GitHub submissions, mind you. So good to see that Chainlink is having a very healthy amount of innovation efforts happening at the moment. Social dominance, not much to say. It's staying pretty low. Its last huge social dominance spike happened on the 24th, which was right around its latest local price bottom. And then weighted sentiment is pretty neutral right now. Nothing super negative or super positive at the moment. Ratio of transactions, of daily on-chain transaction volume and profit to loss, showing a little bit of profit, but nothing special. We can see the one yesterday coincides with the realized profit loss negative spike, and that was a good sign that price could rise shortly thereafter. The whale transaction count fairly low, despite the steady accumulation that we're seeing here on the supply distribution end. Now, this model is still trying to load here, but in the meantime, Balresh, do you see any more asset requests in the chat right now? I want to leave this screen open so it can continue to load.
Another limited one regarding metrics, but SHIB was requested. I think that's the only one for now.
Cool. Yeah, let's take a look at SHIB. If this loads, it loads. If not, we'll just look at it next time, guys. But there are definitely some interesting ones that had been showing some spikes. I think we updated actually recently about it. Not there. We're going too far back. It's okay. Here's one actually. XRP had a huge spike back on the 19th, so just about a week ago. We had this big spike that occurred right as prices were bottoming out, and it has recovered since then a bit. But that's the kind of thing we look for when it comes to whale transaction spikes. We want to see that, you know, after a huge drop or even on a huge rise, whales are becoming active, and there's a lot more $100,000 plus valued transactions than usual happening. And that's pretty much what's going on here on the 19th. If we continue to see high amounts for XRP, that would be a very good sign. This model just does not want to load for me today, but that's okay. We'll look at it next time. And in the meantime, you know, just take a look at this one as an example for what we want to be checking out on the whale transaction count end. All right, so SHIB, let's take a look at it really quick. That is an ERC20, so we'll have plenty of data on it. Circulation, pretty much staying dormant for now, nothing special there. Daily active addresses, same thing. We're down to about 5,500 daily active addresses per day after being as high as about 37K. So we're less than 1/7 the amount of daily active addresses that we had compared to when it was really at its top in early November, right when a lot of other assets were starting to see its all-time high. It's interesting to note that SHIB had its all-time high about 2 weeks before Bitcoin and Ethereum did, around November 8th and 9th. Let's look at the main MVRVs, because we should still have daily MVRV data on it. 30-day, and we'll add 365-day as well. So in red here is the 30-day MVRV, and it's showing that we're just about neutral right now and not really anything in either direction. But the 365-day, it's notable that we are sitting in a very negative range and have been ever since the huge drop that occurred in mid-May that was pretty much crypto market wide, with a 365-day MVRV of -57. it's definitely showing that there could be some meat on the bone for a rise. You know, we weren't quite that low last year in September when we were sitting at around negative 31.5%. And then eventually we had this huge rise where MVRV didn't just get to plus 132. It went up again all the way to a peak of plus 483. That almost certainly will never happen again for Shiba. It usually, you only see these numbers really when an asset is first getting off the ground, which Shiba was in 2021. But as time is progressing and there's more room for things to settle down and more investors, it means that there's going to be tighter windows of negative and positive MVRVs. And right now, relatively speaking, it's very negative, considering we're almost a year past, or almost 2 years past the inauguration of Shiba on public trading platforms. So good sign, neutral sign on the midterm, very good sign on the long term. Age consumed, pretty much non-existent. Dormant tokens are not moving. Supply and exchanges is moving down, sitting at about 14.4%. This pretty much matches the low that we saw in December. So that's good to see that the inflow of coins to exchanges has halted and moved back down. Now let's take a look at some whales. It's a little deceptive for Shiba because it's still kind of a centralized asset with almost all of its coins held by 10 million plus coin addresses. But that's, you know, what's the math there? 10 million times 0.00013. Let's do it really quick on Google here. Times 0.00013. So that's only $130. So like, it's really tough to even label what is a whale right now because of the fact that the 10 million plus tier is basically $100 plus addresses. So it's pretty impossible to tell you right now how how different asset tiers are correlating with one another. They're all gonna be pointing up for now as this red line just very slowly drops down until the price gets to something that's mathematically reasonable here. Exchange flow balance, mostly outflows going on, which makes sense with the supply and exchanges showing that it was dropping. Network realized profit loss, neutral right now. Development activity, we don't have that right now for Shiba. We did see a big social dominance spike for Shiba, going up to 6.44%, which is quite large. I'm not quite sure what this is related to because it didn't really see any sort of decoupling as of late. There was a decoupling about 2 weeks ago and social dominance reacted, but this latest spike is even higher, and in fact was the highest spike we saw of the year. So that's something to keep in mind. Shiba is on traders' radars at the moment for one reason or another. And if anyone, especially the person who requested this coin, knows a little on why, please feel free to let us know. Weighted sentiment is in negative territory this week, just with a 2-day sample size. And it is the most negative we've seen since early July. That is a good thing. We like to see altcoins in negative territory, showing that there's a lot of FUD and skepticism related to the asset's future. Ratio of on-chain transaction volume and profit to loss, looking pretty neutral at the moment. Whale transaction counts are very few and far between. Let's zoom in just a little bit. 4 hours is right. Check out the alpha that was right here after this huge rise. There were 168 whale transactions in just a 4-hour span a little under 2 weeks ago, midday here in the Pacific time zone, and right after the price really just dropped and dropped. Now it's rising again. You can see another whale transaction count spike right here, at least in clumps, right at the top once again. That would have been another sign that a top could be forming. And now it's pretty much back to normal amounts of whale transaction counts where there might only be like one. Actually, this is on a 5-minute scale. Let me move it up to 1 hour. But yeah, like on a 1 hour time scale, we see maybe 2 there and none in the previous hour or two. So That's about back to normal for Shiba. In terms of mean dollar invested age, pretty much nothing to say. The dormant tokens are continuing to stay in dormant addresses. And that's pretty much it as far as Shiba goes. Hope that answered your question. Let me check the chat really quick. Interesting, 4chan. Yeah, I see the point. When 4chan or some specific platform is shilling an asset heavily, it can sometimes work as a detriment to that asset instead of in favor of it, because it's so well, it's being perpetuated too much in the mainstream. Therefore, there are too many small addresses that are trying to pump up the price, while whales just see that and keep the price down. Powell just killed the market. Let me check on the market. It says something very interesting. Yes. Okay. So there's been a huge downswing just in the past hour here. Let's check out what Powell just said. Rates will rise until job is done, bringing down inflation. Fed's fight to tame inflation is unconditional. Yeah, so it looks like there's definitely intent to raise interest rates again, which is not great news after the positive CPI report. So yeah, it looks like his speech has caused the Dow to drop 400 points, and crypto has dropped along with it, which is expected. And now we have to wait, because there's going to be quite a bit of volatility right now, folks. That's going to put a cog in pretty much all of the market analysis we've just done, because it changes the conditions wildly. But regardless, I think that's some big news, and something that we'll update throughout the day to see how crypto platforms are actually reacting to this news, because it's going to create some volatility, to say the least. And going into the weekend, it's probably going to continue even with the decreased volume, especially with this happening on a Friday morning here in the US. No worries on the Polkadot review. Stocks nosediving. No worries on missing the stream, Justin. We have the replays for anyone who missed it up on our YouTube. Yeah, and I think that's a wrap for today. I'm going to do some analysis offline and see exactly what's going on with this Jerome Powell announcement and how the markets are currently reacting. But I want to thank everyone who tuned in for the stream. Don't forget to tell your friends about our latest streams that occur, because we are always going to be updating the latest and greatest on what's going on. And we'll probably even have some special guests coming up soon. On top of that, I want you guys to circle Wednesday morning, or at least 9:30 a.m. my time, Pacific time. That would be 4:30 p.m. UTC. And we're going to be having another Twitter Spaces with a few special guests to talk about the latest market conditions. So we hope you can tune in for that. And in the meantime, I hope you stay safe. Watch closely what's going on with the Fed announcements that are currently happening, because there's going to be some major fluctuations that continue. And for now, I wish you all a great weekend, and we'll talk to you soon.